Thank you for tuning in to another edition of the Vulcan Report with yours truly, the Algo Capitalist. Today is Monday, May the 7th, 2018. All right, so let's take a look at what the markets are looking like so far for this week. Did have some rally alerts in the Dow and NASDAQ, but now I think that anything goes at this point. All right, starting with Bitcoin futures, as you can see, a down day to start the week off, followed by a continuation so far of said down day. Market is threatening here to turn back bearish off this correction. Market is still technically in that corrective bounce off the lows, and looks like it is starting to run out of steam a little bit. So I'm going to keep tracking it to see where it goes from here. Looking at the Dow futures, all right, the market did have a continuation, and that was from Friday. Tuesday is a possible continuation as well. We do have a bit of a pointer situation to talk about from Monday's trading. Now this is the Tuesday's trading bar, as futures have begun trading for Tuesday. I think the market's really having a big problem with the 24,000 level. Let's say 24,400. All right, 24,400 is overhead resistance at this trend line resistance here that the market's going to have to overcome. Overcoming that 24,400, 500 level, it's going to be strong resistance, and even if the market does close above it, it's going to be in the Kumo cloud. So it'll find itself in the Kumo cloud of death and consolidation. And if it remains in the cloud, it could do so well until, the last week of May. All right, so as you can see, this cloud extends out all the way out to June. So anything goes at this point, but I'm in the school of thought that thinks that this downtrend channel is going to find prices falling below the Kumo cloud. Technically speaking, prices have been below the Kumo cloud since back here on April the 19th. And here we are in May 7th. We've been below the Kumo cloud. You've had little technical bounces, but you've still been below the Kumo cloud. To show you the channel a little bit better here you draw it like this. All right, so the downtrend channel is as such. All right. And prices have been trading within the channel, okay? Have not broken out of the channel yet. Prices are just obeying and staying in this channel. We go bottom side, go back to top side, come down to bottom side, now we're back to top side, and I'm anticipating the market to start falling back down again. It's getting a little long in the tooth here on the overboughtness. So we'll have to wait and see what happens, but this is still in a downtrend channel in the Dow futures. All right, you are in the downtrend channel, so don't see anything changing anytime soon until it does. Looking at the NASDAQ 100 futures, it's a little bit different story. You're not in a downtrend channel per se. Market has broken out of its downtrend channel. Show you that one. All right, so the market was in this downtrend channel, and it broke out of the channel top side. The question is it going to be able to remain there? All right, broke out of the channel, broke out of the Kumo cloud, but now where do you go from here? That's the big question in the NASDAQ 100. All right, getting a little long in the tooth here. Overbought situation. Let's see here, 68.46 on the close is a problem. Market needs to close above 68.46 in order to break out of this this channel. Okay, this very long channel. Prices are still where they were back, April the 17th. So we really haven't broken out of the channel. You broke out of the downtrend channel, but not broken out of the longer term consolidated channel. All right, so you have a messy situation that looks like this. And this can head fake a lot of people and get people caught up because they see this. And they say, ooh, prices are broken out of the channel, but it was a downtrend channel within a longer sideways channel. Okay. So it looks like this. All right. That's what we had going on. So the way price action was behaving within the longer term sideways channel, you had a downtrend channel within that. All right, the market broke out of that downtrend part, sideways channel, and then it's starting to try to break out top side of the longer term, all right, resistance. So it's still under the power of the longer term sideways moving action. Now let me erase this and show you what else you got going on this chart. All right, on this daily chart as well, you have a situation where you're trying to start the beginning of a lock-in on a bullish pulse wave. It's trying to do that. That's what I said. It's trying to do that. It's trying the pulse wave. All right, it failed back here. Boom. Now it's trying to do it again. And I suspect it might fail again because if you look here on the weekly chart, all right, the market has stopped trending and it ceased trending. Trend lines are still in a bullish situation, but you don't have any trending right now. Market's been in a sideways corrective mode. All right, it's having a problem with 7,000. Every time it looks like it's going to run up toward there, it gets beat back down again. All right, that's what you got right here. You had a sword, you thought you were going to take it out, made another sword, and then you made a bottom one. This is a big bottom one, just like this one back here. And then it's just up, down, up, down, up, down, and really not doing a whole lot at this point. So we shall see. Will the market be able to get back up to the 72? Or is it going to fail somewhere along the way? And then we'll have basically a double top. Very interesting markets right now. Very interesting scenarios across the board. Let's see here. Let's look at the bonds real quick. All right, bonds still in that bear market that we've been talking about. And even though you see green on the screen on the weekly, it has not regathered bullish momentum. It's still in a bearish momentum cycle. Pulling up the daily chart, you can see it's running out of steam at this trend line. This 143.23 area is a problem. All right, we'll just round it and say 144. That's a problem. 144 is a problem, and the market is running out of any kind of bullish conviction to get it up there. So I anticipate that at some point the bears are going to smell some blood in the water and they're going to start selling it. And bonds will back off again without any type of a Fed intervention. They've meddled in this market for so long, people have forgotten that they've kind of like stepped back a little. But they may come back in and intervene. We'll see. Looking at the US dollar. US dollar is still gathering strength and momentum, trying to, play around with that 93 handle. This one has not corrected yet. It's just correcting off the lows, and it's just running Run away. The train is running away. Taking a look at the equity counterpart, the UUP, you can see how it's broken out as well from the 2360 to the 2438, almost a full dollar run up. And the UUP, which barely even moves. All right, let's take a look now at the crude oil. What do you know? $70. I do believe I told you that crude oil was on its way to $70 quite a while ago. For those of you who have been following my daily videos. So the initial profit target is now hit. Okay, so you're wide open at this point. You have to prepare that the market is ready to correct at some point before continuing higher. If it starts to gallop and explode higher from here, then that means you're going to end up spiking somewhere, and then it's just going to collapse down suddenly. But if it has a little correction here, it gives up a little momentum and then relocks back in again, that's healthy as long as the market can stay above its trend lines and your momentum stays where it needs to be. All right, right now this market is poised to run. 72 will be the next likely target. So we'll have to see where it goes from here, but strong markets indeed. Taking a look at the equity counterpart DIG, you can see it's showing that the market is already starting to reverse. All right, it reversed on that daily chart there. Taking a look at USO. USO also doing the same thing, starting to pull back now. Looking at UCO, same thing, starting to correct and pull back. Looking at the XLE, a lot of people like the XLE as an overall. You can see it's also starting to correct. Pay attention that these correcting bars that we've seen in the last three charts are forming pointers as well. All right, the moment you've all been waiting for. Let's look at this gold. All right, as you know, gold has collapsed below the Kumo cloud on a daily. Trend lines and price below the Kumo cloud, and it is showing bearishness, and it's in a bearish stance as the market is looking maybe for one more push up here toward the 1323 area, but at that point I see the bears re-entering and pushing prices lower. I think we're in danger of dropping below 1300 in gold. Looking at silver. Silver right now is trying to maintain. However, you're still in a bearish situation. You're in a bearish pulse wave or negative pulse wave. And even though the market is sustaining a few closes above the momentum line, overhead resistance at 1654 is a real problem. And then again at 1658, we'll just say the 1660 level is proven to be a very difficult price for silver to get a good close on. All right, 1660, it just can't do it. It's been struggling and can't do it, and it's in the Kumo cloud right now, and in jeopardy of dropping back below the Kumo cloud and dropping below 1620. So metals are still looking weak here. All right, still at a downtrend channel on the silver until it's not. All right, folks, so with that being said, remember pulsewavetrading.com. Take advantage of the free study course that comes with your purchase of the weekly Pulse Wave price triggers. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.